Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine balance of payments deficit widens to $2.56 billion in April, raising concerns over capital outflows and external pressure. President Bongbong Marcos says he's open to reconciliation with the Dutertes following a divisive midterm campaign season. And world leaders welcome the Pope's offer to host Ukraine-Russia talks, potentially positioning the Vatican as a neutral peacemaker in the conflict. Let's take a look at how global markets moved overnight as investors react to a major shift in U.S. credit ratings. U.S. stocks ended mixed on Monday as market sentiment turned cautious following Moody's downgrade of the federal government's credit rating. The ratings agency lowered the U.S. sovereign rating to Aa1 from the highest AAA grade, citing the country's $36 trillion debt burden and rising interest costs. The announcement was made after the market closed on Friday.
It actually takes a decent amount of investors off the table. A lot of investors out there, i.e. like Japanese banks, for example, may only be able to buy AAA securities. And while some institutions may use what's called weakest link, which is, okay, we're going to take the AA rating, the weakest rating, and that's what we're going to assign it. Some also say, okay, as long as it has one AAA rating, that's good enough for us. So this will be a slow burn, I think, over the next 3 to 6 months for banks, regulated entities, et cetera, to look at United States credit and maybe say, hey, this isn't for us anymore.
The Dow Jones Industrial Average ended higher by 0.3%. The S&P 500 up by just 0.1%, while the tech-heavy NASDAQ was flat with an upward bias. Over in Europe, markets traded mixed. London's FTSE 100 rose 0.2%. Germany's DAX higher by 0.7%, but France's CAC 40 flat with an upward bias, rather a negative bias. The Philippine balance of payments deficit widens in April, highlighting the country's vulnerability to capital outflows amid global uncertainty and debt servicing pressures. Data from the Bangko Sentral ng Pilipinas shows a $2.56 billion deficit for the month, 4 times larger than the $639 million gap recorded in April of last year. The balance of payments, or BOP, measures all transactions between the Philippines and the rest of the world. A deficit means more dollars left the country than came in, usually through imports, debt payments, or capital flight, while a surplus indicates net inflows. The BSP attributes April's sharp deficit to the national government's external debt payments, underscoring the impact of public sector outflows on the country's external position. Economists say sustained BOP pressure could weigh on the peso and influence future monetary policy, especially as markets monitor U.S. rate signals and regional capital moves. Philippine borrowing costs shift as global credit risks ripple through local debt markets. The 91 and 182-day Treasury bills fetch lower average rates of 5.52 and 5.61%, down from last week's 5.55 and 5.65%. But the yield on the 364-day T-bill rises to 5.7%, up from 5.65% just last week. RCBC's chief economist, Michael Ricklefort, says the uptick in longer-dated T-bills may be partly due to the recent downgrade of the U.S. credit rating by Moody's, which pushed U.S. Treasury yields higher. Since global bonds are priced off U.S. Treasury benchmarks, higher yields abroad can raise funding costs for other governments, including the Philippines. Economists say the shift highlights how local borrowing conditions remain sensitive to global shocks, despite cooling inflation and possibly more policy easing ahead. On another front, the Senate Committee on Ways and Means pushes for higher excise taxes on vape and tobacco products, framing it as both a fight against smuggling and a move to protect the youth. Committee Chair Senator Sherwin Gatchalian says that the proposal comes amid rising vape use among adolescents and a surge in illicit tobacco trade. He rejects the notion that lower taxes would reduce smuggling, saying stronger taxation and enforcement are crucial to curbing the black market and to safeguarding public health. Gatchalian is currently leading deliberations on House Bill 11360, which seeks to amend the National Internal Revenue Code by imposing a 41 peso tax per pack of heated tobacco products and 66 pesos and 15 centavos per milliliter on vape products. Lawmakers say that the measure could strengthen revenue collection while addressing health risks and cross-border smuggling, a growing concern as cheaper, untaxed products enter the Philippine market. The Bangko Sentral ng Pilipinas warns the public against fraudulent job offers that illegally use the image of BSP Deputy Governor Chuchi Fonacher. BSP says it has received reports of unsolicited messages on Viber using Fonacher's photo to promote fake jobs with false promises of daily earnings ranging from 500 to 5,000 pesos. The central bank reminds the public that all legitimate BSP job vacancies are posted exclusively through its official website and verified social media accounts. Authorities are urging the public to be vigilant as online scams continue to exploit trust in institutions using high-profile names to lure victims. The government pushes for greater transparency from procurement to budgeting as it seeks to rebuild investor confidence and reverse the drop in foreign direct investments. Sujin Kim has the details.
The Department of Budget and Management, together with the Department of the Interior and local government, has formally launched the country's campaign for open government partnership. This also as foreign direct investments in the Philippines plunged to their lowest level in 10 months. According to the Bangko Sentral ng Pilipinas, the sharp decline in inflows reflect global volatility and persistent governance concerns, both of which have dampened investor confidence. In a bid to reverse the trend, the government is now pushing for more transparency across the board, from procurement to budgeting and even local legislation.
The impact of this is that the investors would come in more because there is transparency, there is open governance, they can see on where the money of the people goes and on how it is being spent. Then investors' confidence will be able to attract more and sustain the administration's economic activities.
Our foreign funders, they look at how transparent, how accountable and governments are. They look at the scorecards of the countries, how they're faring, especially in good governance principles. Because when they see that, they become more confident.
The DBM's procurement service emphasized that digital tools like the e-marketplace and e-bidding systems will enable real-time monitoring of government contracts designed as anti-corruption mechanisms.
Our commitment to the Open Government Challenge zeroes in on anti-corruption and public participation.
Local governments are also stepping up. Cities like Quezon City, Baguio, and Odiongan have institutionalized people's councils, passed participatory budgeting ordinances, and created mechanisms for citizen-led audits. The government is also reviving efforts to pass the long-stalled Freedom of Information Bill, a crucial reform that could strengthen risk transparency and enhance the country's investment profile. Sujin Kim, Bilyonaryo News Channel.
The planned 17-month closure of the Guadalupe Bridge is expected to severely disrupt traffic on EDSA, with wider implications for mobility, housing, and business activity in Metro Manila. Lichu Property Consultants warns that the closure could drive a surge in housing demand in Makati and Taguig as commuters look to move closer to major business districts. CEO David Lichu advises workers in Makati, PGC, and the Bay Area to start making contingency plans, noting that the closure may last longer than expected. The Japan International Cooperation Agency, or JICA, earlier flagged structural cracks on the bridge and its proximity to the West Valley Fault as critical risks, prompting the rehabilitation. Experts say that the project underscores the urgency of long-term urban planning as Metro Manila struggles to balance infrastructure safety with economic efficiency. After 3 months of strong gains, the Philippine auto market hits a speed bump in April with sales dropping across nearly every segment. Is this a momentary dip or a sign that headwinds are building for the industry? Our mobility correspondent G. Baroga reports.
After After cruising through 3 strong months, the Philippine car market hit a bit of a speed bump in April. Just over 33,500 units were sold during the month, down from more than 40,000 in March. That's a 17% drop month-on-month and 10% lower than April last year. A joint report by the Chamber of Automotive Manufacturers of the Philippines and the Truck Manufacturers Association shows that passenger cars took the biggest hit. Sales fell by 23% from March and a steep 35% compared to the same month in 2024. Commercial vehicle sales also slid, with a little over 27,000 units sold in April, about 15% lower than March's numbers. The dip extended to Asian utility vehicles and light commercial vehicles, each segment showing the same downward trend. Even the usually buzzy new energy vehicle segment wasn't spared, dropping by 20%. Only 1,509 units were sold in April, down from nearly 1,900 the month before. Hybrids still led the charge in this category, followed by battery electric vehicles and plug-in hybrids. Industry groups point to a mix of reasons behind the slowdown, from seasonality and economic conditions to shifting buyer behavior. And despite April's weak performance, the local auto industry still racked up over 150,000 units sold so far, a 3% increase compared to the same period last year. Toyota Motor Philippines of the Bilyonaryo T family continues to lead the pack with a commanding 48% market share, with almost 72,000 cars sold in just the first 4 months.
But it's not all gloom and doom. While April may have put the brakes on the industry's momentum, automotive leaders remain in gear and keeping a close eye on trends as they steer toward the rest of the year. For BNC Mobility, G. Baroga.
Meta Platforms' Philippine unit is taking its tax dispute with the Bureau of Internal Revenue to court in a case that highlights growing scrutiny on big tech's operations in emerging markets. The company filed a petition for review before the Court of Tax Appeals last April. While details of the assessment have not been disclosed, the case could have wider implications for how tech giants are taxed in the Philippines. Meta's local office, based in a tax-incentivized zone in Taguig, handles sales and advertising support services for the Philippine market. Under Philippine law, companies may appeal to the CTA if the BIR issues a final decision on a disputed assessment or fails to act on a protest within a set period. Meta's presence in the country is massive, with Facebook alone boasting over 102 million users last year, making the Philippines one of its biggest markets worldwide. The case comes as authorities around the world, including in Southeast Asia, move to tighten tax rules for digital platforms operating across borders. The Insurance Commission steps up regulatory enforcement, ordering the liquidation of Caritas Financial Plans and placing Get Well Health Systems under conservatorship as it moves to contain risks and protect consumers in a fragile financial services landscape. Caritas Financial Plans, which had liabilities exceeding its assets, was earlier placed under receivership. The company will now begin selling assets to pay off its creditors. Plan holders and claimants must file their claims before September 16th this year to participate in the liquidation process. The Commission clarifies that Caritas Financial Plans is distinct from other Caritas entities, some of which are also under regulatory review. Meanwhile, Get Well Health Systems is barred from accepting new clients after failing to meet capitalization and reporting requirements. As of the fourth quarter of last year, the company had 220.45 million pesos in liabilities, outweighing its assets of just 142.62 million pesos. These moves come amid broader efforts to tighten oversight in the pre-need and healthcare sectors, where weak financial positions and lax compliance pose systemic risks to consumers and investors alike. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Tuesday morning. So far here in Asia, shares are trading to the upside. The Nikkei 225 is higher by 0.6%. Hong Kong's Hang Seng Index up by 1%. Shanghai's Composite higher by 0.3%. And Singapore's Straits Times Index higher by 0.2%. Here at home, Philippine shares closed lower on Monday as investors reacted to the historic downgrade of the United States' credit rating. The main gauge ended at 64.55, down not by much, down by 0.2% amid concerns that the downgrade in the U.S. could push their treasury yields higher, sparking risk aversion in equity markets worldwide. While the loss of the U.S.'s last AAA credit rating was expected, analysts say its broader impact on global rates and investor sentiment remains a key overhang. Over the short term, Philippine equities may see modest gains amid bargain hunting, easing inflation, and hopes for policy support. However, caution will persist as investors monitor U.S. economic signals, global yield movements, and geopolitical developments. Now, taking a look at our market as of 10:22, the main gauge is in the red. Actually, we're looking at a sea of red right now. Looks like the downgrade, the U.S. losing its last AAA credit rating is weighing on investor sentiment because it's going to affect flows into emerging markets such as the Philippines, and that's top of mind for investors right now. Main gauge is lower by 1% to 63.95. The broader all shares index in the red as well, down by 0.5% to 37.45. As for the sub indices, everything is trading to the downside. The financials, industrial, holding firms, property services, and mining and oil counters are in the red, with the holding firms and services counters leading the declines, well entrenched in negative territory early this Tuesday morning. Total volume is at 105 million, and value is at a little over 1 billion. Now, market breadth is negative. We've got 63 decliners, 53 advancers, and 38 stocks unchanged. Now, taking a look at the currency market, the peso opens weaker at 55.73 to the dollar, lower from its previous close of 55.67. Now, a Hong Kong-based investment firm buys a significant stake in PAL Holdings, signaling renewed market confidence in the flag carrier's post-bankruptcy turnaround. Oasis Management acquires nearly 6% of Philippine Airlines' parent firm for 2.3 billion pesos through block sales on the Philippine Stock Exchange over the last 4 months. The shares came from PAL's creditors and aircraft leasers, following the airline's approval to list over 17 billion pesos in new stock. Despite its reputation as an activist investor, Oasis says it has no plans to interfere with the operations of the airline led by Bilyonaryo Dutertes. The deal comes 2 years after Philippine Airlines completed a $2 billion debt restructuring after filing for bankruptcy during the pandemic. Now, the entry of a foreign fund marks a new phase for Philippine Airlines as it works to strengthen its balance sheet and compete more aggressively in a reviving travel market. Now, still on that travel space, travel demand in the Philippines remains resilient despite inflation and global economic uncertainty. Filipinos continue to prioritize travel for wellness, leisure, and personal experience, driving momentum across domestic and regional destinations. One platform helping power this shift is Klook, a digital travel platform that connects users to experiences, tours, and getaways across Asia and beyond. Joining us now to talk about Klook's strategy, growth plans, and what Filipino travelers are looking for in 2025 is Michelle Ho, the General Manager of Klook Philippines. Hi, Michelle. Thank you for being here with us.
Good morning, Maiki. Thank you for having me.
Yeah, okay, so let me just take this out. Okay. Klook has 30 million users. You've been in operations for about, how many years have you been in operations?
So globally, we've been around for over a decade now.
Over a decade, okay.
And in the Philippines, we
since
launched
2017.
our operations back in 2017.
About 9 years already. For those that aren't too familiar with what Klook is, can you tell us more about it? 30 million users globally, that says a lot for a relatively new firm.
Absolutely.
But with this online space in travel, you have the scale and you've only just begun.
So for those who are not aware, Klook is Asia's leading platform for travel services and experiences. So we've curated over 500,000 experiences worldwide, ranging from hotels, tours, activities, and local transport, and over 2,700 destinations worldwide.
You're based in Hong Kong. You've conquered Asia Pacific, and you're setting your eyes on the West. Can you tell us more about this?
That's right. So our core business had always been in experiences, so we're very big here in APAC. So for those of you who've tried Klook in the past, you've probably used us for Hong Kong Disneyland, for Universal Studios in Japan, and for a few of our curated experiences and activities and these popular destinations in Asia. But now that we're slowly expanding into the U.S. and Europe, you'll see a lot more of Klook. You'll see a lot more of different types of experiences. Just recently, we did live events in France, so we're also a ticketing partner for the French Open. We're also in partnership with a lot of the big concerts that are happening. So just last year, we did the Taylor Swift Eras Tour in Singapore. And just this weekend, we also did the Lady Gaga concert.
It's an exciting space to be in. In the Philippines specifically, you've been in the country for almost 9 years. Can you tell us how the user base in the Philippines has evolved since?
Right. So Klook in the Philippines has been around since 2017. Around 80% of our users are coming from millennials and Gen Z. So they're very much on the go, digitally savvy. They're very much used to the kind of platform that we offer. And we're seeing a lot of good shift in terms of consumer preferences as well. So we do listen. And so I think over time, even the kind of offerings that we've offered from day one to today, it's very different. We have a lot of the traditional experiences, like a floating market tour in Bangkok, for example, all the way to the more curated ones, those that you see on social media. So the color analysis in Korea or the head spa in Bangkok. So we've evolved not just in terms of the number of users that we attract, but also the kind of supply that we've listed on the platform.
Okay, talking about your user base, you said 80% are Gen Z and millennials. That's a pretty wide age range. That's between the age range of 18 to 40. Can you tell us more about this segment, this traveler segment? What are they looking for in terms of experience, and how strong is the demand from this demographic?
Well, in terms of travel demand, we're seeing a strong resilience with both domestic and international travel experiencing substantial growth. Just during the peak period alone, we saw good growth coming in from the Holy Week and summer travel period. Sustained appetite, definitely, despite the economic headwinds. And a lot of these types of consumers interact with our app because they've seen us on social media. So I think that's one major shift that we're seeing from a younger demographic. They lead into the TikTok videos, the Instagram Reels, in terms of both inspiration and discovery. And so a lot of our experiences, we build this through our content creators. So we have over 3,000 content creators that we directly partner with that post about travel hacks on a daily basis. And, our ambassadors of Klook as well.
Yeah. What's driving the demand for travel in the Philippines, specifically among the 18 to 40-year-old set, the millennials and the Gen Zers?
Social commerce is a powerful engine, I must say, and that is absolutely why Klook has been leaning into that concept of driving inspiration all the way to conversion through social commerce. And so we've invested quite a bit in building the right technologies to be able to support that kind of consumption and that kind of discovery for our users. And I think it's quite an interesting space.
Yeah, it's interesting.
Quite a bit.
It used to be a luxury. To travel was a gift. It was a luxury, and now it's a necessity. And what role has social media played in the changes, the psychological changes associated with the sector?
That's absolutely right, Maiki. So, in terms of how Filipinos are viewing travel, it is indeed, they recognize that it is helpful to their emotional well-being. They see it as an escape from the stresses of daily life. And so I think it has become a lot more accessible as well. I think Klook has done a really great job in terms of democratizing travel, making it accessible from a supply point of view, being able to be where our consumers are, which is on social media, but at the same time, making it financially accessible for Filipinos because we deal with a wide range of travelers from budget all the way to high end.
And you deal with a wide range of tech needs also. That said, you are a tech firm with a travel core. And the benefits of this, you've got 24-hour coverage, you have dynamic pricing, you have scalability and reach. If you were a boutique or a smaller travel agency that was not online, you wouldn't have the reach. You guys are going to go global. You have plans of conquering the West now. So can you talk to us, Michelle, how has social media reshaped the travel experience on your end? How has it affected demand? And what are the operational shifts that you guys have had to tackle and hurdle given the strong online demand?
Well, they said that Gen Z broke the marketing funnel, and that's absolutely right. I think in terms of touch points, that had really evolved so much so that Klook is investing less in traditional touch points and really going very aggressive on social media and digital as part of our growth strategy. And so we foresee that to continue, especially with evolution of AI and how that interacts with our platform and how that interacts with our consumers. Because, there are so many different use cases that can go as far as, really expanding into social media and expanding into AI is concerned. And we're paying a very close attention on how that could play out, even for our consumers. But for now, I think, it's been very helpful in reaching the right consumers. It's been quite interesting partnering with a wide array of content creators that have their own, own style of building content for travel. So right now, we're just really paying attention to that.
Yeah, taking a look at your strategy, traditional versus social commerce. How much of your ad spend, how much of the efforts that you put in are on the traditional front, and how much of it is on the social commerce side?
I'd say about 80% would be on social commerce. That is, with both digital and also the content creator investments that we do. Then the rest would really be on offline investments and more traditional touch points. By offline, we still do value that human connection that we have with our consumers. And so every year we have what we call our Klook Travel Fest. That happens right before the peak of Christmas travel period. And that's our way of, meeting our consumers face to face, introducing our brands, bringing in the likes of Disney, Universal Studios IP into Manila, and allowing people to experience that firsthand.
Okay, and what's your outlook for travel demand in 2025? How much growth are you seeing in this industry, and do you expect to be growing by double digits annually over the course of the next perhaps couple of years?
We remain optimistic that travel will be sustained in terms of interest and in terms of demand. We've been seeing that both international and domestic have been pumping up both for consumers in the Philippines. And we're going to be doubling down on our investments, especially for domestic tourism, where we're seeing that there's demand not just for the Boracay's, the Cebus, the Palawans, but also in lesser known destinations. And we're taking advantage of our platform as a digital platform, basically, to be able to expedite that digitalization of local operators, local SMEs, bringing them into our platform.
Yeah, you bring more operators onto the table also. And where's everybody going? There's the usual Hong Kong, Japan. Where is the demand highest for destinations amongst Filipino travelers?
Maiki, what's interesting is we're seeing triple-digit growth for Thailand and Vietnam. So that is, as of year to date, we're seeing that to be one of our stronger destinations so far amongst Filipino travelers. A lot of factors play in, definitely in terms of, it being quite new to a lot of Filipinos, and at the same time, it having a culturally rich and immersive slew of activities that you can try in these destinations. So not to mention, it's quite popular and viral on social media now, which I think is encouraging a lot of millennials, a lot of Gen Zs.
Absolutely. Everybody likes to see the videos. They see the food, they see the videos, and they want to go there and they want to try that, and they have a peg.
Yes.
Okay.
sure.
And in terms of experiences, what are the experiences that Filipinos are booking online through your travel platform?
It's a wide range. So young families are still booking the theme parks. For example, World of Frozen had just opened up. Hong Kong Disneyland is celebrating their 20th anniversary this year. We've got new rides in Japan and Singapore as well that a lot of young families love to experience with their kids. But for the younger generation, I think it's really more of the viral experiences we're seeing on TikTok. So the color analysis session that we had seen in Korea, or the curated experiences or food tours that we're seeing in both Bangkok and Japan.
Yeah, and lastly, Michelle, for those that want to go on Klook and that want to book their next getaway, what tips can you give them to maximize, to get the best price and to get the best experience on your site?
Download the Klook app for sure. It's best experience on the app. And obviously, we work with a lot of creators. So from time to time, we do have really amazing deals that they can try out if they were to book for their next trip.
All right, thank you so much for your time, Michelle, for telling us all about travel tech and the demand in the Philippines.
Thank you.
All right, we're taking a short break. Business 360, we'll be right back. Welcome back. The Commission on Elections proclaims the winning party list groups in the 2025 midterm elections. Akbayan and Tigog secure 3 seats each, while 4Ps, ACT-CIS and Ako Bicol each get 2 seats. Meanwhile, the Duterte Youth, which was initially allocated 3 seats, is not proclaimed due to a pending case dating back to the 2019 elections. Bagong Generacion also fails to secure proclamation for its lone seat because of another COMELEC case. Sick of politics, President Marcos reflects on the midterms after his senatorial slate suffers some losses. In his latest podcast, the president says that the election results show that Filipinos may be growing tired of political drama and are increasingly disappointed with government service. He says that now that the polls are over, he intends to shift focus to delivery and public service. President Marcos also says he is open to reconciling with the Dutertes after months of tension between the two camps.
Ayoko ng gulo. Gusto ko makasundo sa lahat ng tao. Mas maganda, marami na akong kaaway. Hindi ko kailangan ng kaaway. Kailangan ko kaibigan. Ang habol ko ay yung stability, peaceful, para magawa namin yung trabaho namin. Kaya ako, laging akong bukas sa ganyan. I'm always open to any approach na, alika, magtulungan tayo. Diba? Kahit hindi tayo magkasundo sa polisiya, hindi tayo magkasundo. Gawin nyo yung trabaho, pero huwag na tayong nanggugulo.
Some members of the House Prosecution Panel raised concerns over Vice President Sara Duterte's statement ahead of her impeachment trial. They point to her remark expressing a desire for a bloodbath during the proceedings. Iloilo Representative Lorenz Defensor says such statements have no place in government and denies claims that the Vice President is being prejudged.
Saying that she wants a bloodbath, that attitude has no place in government. It's a terrible example to the youth who are watching her, and many Filipinos look up to her, idolize her. That's a terrible example. I don't think there's any truth that she has been prejudged. There are prosecutors like me who are objective and who will be as fair as much as I can. The important thing is that the evidence can be presented clearly and properly, and we will leave that to the senators to decide whether she is guilty or not.
Meanwhile, Representative-elect Laila De Lima emphasizes that an impeachment trial is a constitutional process and warns against any attempt to turn it into a spectacle. She adds that any actions disrupting the proceedings could result in being held in contempt. Palace Press Officer Attorney Claire Castro says President Ferdinand Marcos Jr. will not intervene in the impeachment trial of Vice President Sara Duterte. Castro also addressed the Vice President's earlier statement where she said she wants the trial to push through because she wants to see what she called a, quote, bloodbath.
We hope that it is just a figure of speech and it should not be taken literally. Kung yan naman po ang nais niya at talaga naman po magkakaroon ng balitaktakan kapag nagkaroon ng trial, hayaan na lang natin po itong gumulong.
Vice President Duterte has said her legal team is in full throttle mode as they prepare for the proceedings and that she is ready to accept whatever outcome the Senate impeachment court may decide. A controversy in one of Metro Manila's most prominent villages is raising questions about behavior, accountability, and political influence. John Arenas, the president and CEO of PNOC Renewables Corporation, is facing mounting pressure from residents of Dasmariñas village. Over 60 residents have signed a petition calling for his removal from the interim board of the village association after he was caught on video in a heated altercation with car enthusiast Windy Imperial on election day. The dispute allegedly began over claims that Arenas ordered the closure of a door leading to a polling precinct inside the subdivision. Arenas has denied giving such an order. The incident has sparked concern over civility and power dynamics in private communities, particularly as both families are politically connected. Martin Arenas, son of the PNOC executive, won a council seat in Makati under the ticket of Congressman Luis Campos. Dino Imperial, son of Windy Imperial, also won a seat under the slate of Mayor-elect Nancy Inay. The Village Association has yet to issue a formal statement, but the incident underscores the growing scrutiny public officials face even in private spaces in the age of cameras and community accountability. We're taking a quick breather. Business 360 will be right back. World leaders and markets are watching closely as the Vatican emerges as a possible venue for Russia-Ukraine peace talks, a development that could ease global uncertainty if it materializes. The move follows a statement from U.S. President Donald Trump, who said Pope Leo XIV has expressed interest in mediating between Moscow and Kiev. The Vatican has not yet confirmed any formal role, but the Cignal has already drawn support from France, Germany, and Ukraine, who held talks with Trump after his call with Russian President Vladimir Putin. Italy also welcomed the possibility, calling the Pope's involvement a positive signal amid hopes for de-escalation. Pope Leo earlier said in his inaugural address that the Vatican stands ready to mediate global conflicts. Investors are monitoring these developments closely, with any progress toward peace likely to ease pressure on energy prices, defense spending, and supply chains, particularly in Europe. U.S. President Donald Trump signs into law the Take It Down Act, a sweeping measure that criminalizes non-consensual explicit deepfakes and sets new standards for online content moderation. The law targets intimate AI-generated videos shared without consent and requires social media platforms to build fast-track removal systems or face penalties. Tech companies will now have to invest in new detection tools and response protocols, potentially adding compliance costs and legal risks. First Lady Melania Trump, who has advocated for digital safety initiatives, joined the president at the signing ceremony in the White House Rose Garden. The law marks a significant shift in global tech policy, possibly setting a regulatory precedent for how AI-generated content is handled across digital platforms and influencing future laws in Europe and here in Asia. Now, the leaders of the United Kingdom, France, and Canada warned that they may impose sanctions on Israel if it fails to halt military operations in Gaza. The warning comes as indirect talks between Israel and the militant group Hamas began in Qatar over the weekend, a diplomatic move seen as a possible path toward de-escalation. Despite that, Israel continued its ground offensives in Gaza. The Israeli government says it will allow a basic amount of food into the Strip, but a United Nations official says that's not enough to avert a humanitarian crisis. The heightened tensions are being closely watched by global markets, especially as potential sanctions and escalation in the region could further affect oil prices, supply chains, and defense spending. Yemen's Iran-backed Houthi rebels claim to have imposed a maritime blockade on Israel's North Haifa port, further escalating regional tensions amid the conflict in Gaza. The group says that the move is a direct response to Israel's continued military operations in the Palestinian enclave. A Houthi spokesperson adds that the Haifa port is now formally included in their list of targets. The Houthis have previously launched missile attacks toward Israel, though most have been intercepted. While the scope of the so-called blockade remains unclear, global shipping watchdogs and investors are closely monitoring the situation with potential impacts on trade routes through the Red Sea and Eastern Mediterranean. Any disruption in these corridors could pose risks to supply chains, shipping insurances, and energy transport across the region. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel.